Everybody's looking for some form of peace of mind and certainty and control related to how the money's flowing through their life and what it's going to allow them to do with their time. I can go see my grandkids more often. Well, if you love your grandkids, you're probably going to want to spoil them. You can't spoil them if you don't have money that's loving on you. So you're going to tell them, oh, I really wanted to get that candy for you, but I couldn't because I believe traditional retirement system was the way to go. Now I don't have enough money. Or you're going to go into more debt. I know that sounds harsh, but that is the reality of the rules of the game that we see often.
Something that I believe is unique about our process, and you guys have both touched on it in various ways. We don't deal in sales hype. We deal in the facts of what's going on with your specific situation. Because the typical financial conversation is going to be, hey, I can get you this high rate of return with the lowest fees. Those aren't the conversations that we have. We're more focused on creating the most efficiency so that we can reach your maximum financial potential.
What's happening is you're buying term insurance, putting the rest of the money in the market, other assets, whatever it may be. And you're going to continue to do that until one day you retire. What that means is on your term insurance, it's either going to be too expensive or you're going to be talked into and somebody's going to tell you that you don't need it anymore because you technically can self-insure. What that now does to you is you become a slave to three things: the market when it comes to market volatility, the government when it comes to taxes, and the economy when it comes to inflation.
Welcome to the Cashflow Legendz podcast with your hosts Nate, Brandon, and Brock. Remember, our insights are not direct financial advice, so consult with your financial team before making any decisions based on the topics discussed in this show.
Welcome back to Cashflow Legendz. Nate, Brock, and I are honored to be here to share one of your, if not your most valuable resource, your time with us. We do not ever take lightly that you are tuning in 5 minutes, 10 minutes, the whole time. And guys, I don't know about you, but some of my most exciting mornings or evenings are when somebody texts me and goes, hey, you, Nate, and Brock said something today that was really got me to thinking. It really just challenged what I was thinking already, or it encouraged me. I even enjoy it, guys, when somebody says, I think you said something I don't agree with. It's uncomfortable. It takes a little bit of time, but it's a good thing. So today we're going to be talking about a topic that we hear this word all the time, but I don't think from our conversations with other people that we really dive into what it means often. So retirement done right. What does that even mean? How can we use our money to build a life that we love? At a high level, Brock, do you think the world dreads retirement more than they look forward to it right now? From all your conversations, or they have a angst about it, or is there a resounding theme you see with the people you work with?
It's funny, I've had more conversations about it recently than normal, but I would say that there are so many people looking forward to it, saying, oh, I've got 7 years until I'm done. Oh, I got 5 years until I'm done. I got 10. And they're ready for it. However, on the other hand, they're also having some angst about it and asking, what do I need to do with my money? Where does it need to go? It's interesting to hear the two different things that are kind of talking out of two sides of their mouth of what they're ready for, but also totally not ready for as well.
Nate, what about you?
So I'm going to point back to this book right here because our education process and where we're always pointing people in the early stages and even in the later stages is read Nelson's book, Becoming Your Own Banker. It's only 90 something pages, not very intimidating. But Nelson specifically talks about how retirement is a myth. The true definition of retirement is to take out of service. And what I have noticed over the last few years is we have more and more people showing up basically saying, I may stop doing what I'm doing now, but I'm never going to stop adding value or creating value. Like I'm always going to be doing something. I think that's very different from past generations who, especially the industrial age, who had a pension and everything like that, where they were like, hey, you hit this age and you can just kick back, relax. You don't have to worry about anything. And what we've talked about before is when people are truly taken out of service and they lose, it's possible for them to lose a little bit of their purpose, where they're not showing up for other people consistently and stuff like that. And so there have been situations where I used to be in a community where there was a lot of plant workers, and there were situations where these guys were like, in their 60s, but still really healthy. And then they retire and they're no longer showing up to the plant every day. And, 6 months to a year, they're gone.
Yeah, Nate, I think that point right there and what Brock said is a great reminder that money either fuels our purpose or money is our purpose if we quit working. Okay. So the relationship piece, a lot of times when we talk to guys, and I've talked to between Nate and I this week and last 3, 4, 5 guys that are in those stages or heading towards them. So 45 to 65. Okay. It is very interesting when we ask deeper questions. Well, what would you do after you retire? What do you mean? Like, what are you going to do when every day's Saturday? And you just sit there and you let them think about it. And I want to be clear, when we ask those kind of questions, there's already a relationship built. They've already submitted their information. We've already had multiple conversations. So a lot of times Nate and I will ask if we can be invited to ask tough questions. And if somebody says yes, so we start asking us, what would you do? Well, I know that I'm going to always do something because I know that if I don't, I'm just going to die faster. I mean, I've heard that multiple times from 55 to 65-year-olds. So if we know that, then we have to reverse engineer what does even a life that you love living look like? Because to me, that's fun to dream about. But most people just are dreaming about it, assuming it's going to happen when they get to, let's say, the magical number of 65, because that's what America knows more than anything. And then they realize that the math isn't mathin and the plan isn't planning. Let's stop there for a second and really talk about why that is so common, that the math isn't mathin and the plan isn't planning, why things aren't working the way they thought, like over a 40-year period if you're 60, 65. What are some of those reasons?
I think some of them have to do with the fact that if you looked at the national savings rate today, it's 4%. I don't know what kind of math works out to where you save 4% of your entire income and get a rate of return on it to then have the same amount of income for the next 20, sometimes 25 to 30 years after that. And people would say, oh, well, I won't need as much income. I can have less. I don't know if there's ever been a time in my life where I've said, I'll go with less money. I don't need it. And so for me, I think the math doesn't math because one, people don't realize or take ownership of their finances now while they're working, but then also don't have clarity on what life is going to look like afterwards. And it's not just like on your 65th birthday or the day after you retire, you're like, all right, cool. My life just completely changed. Flip the switch. It's done. I don't have to spend as much money. Like, I don't know if that's ever happened. I don't think people realize that it doesn't just flip the switch, everything changes in your world. You're probably still going to spend the same amount of money, if not more, when you retire in those earlier years.
Brock, I'm curious because, there's almost about a 20-year age gap between us. So for your generation, I know for me and Brandon, like in our working years, a lot of conversations we would have was like, I know Social Security is not going to be there for me when I need it anyways. Like, is your generation pretty much set with that same idea? Is like, I'm not going to be dependent on the government. Like it's all on me.
Yeah. Pretty much every conversation I have with younger people, they know or have an idea of the fact that Social Security is more than likely not going to be there.
So I think there's a great topic we can discuss here at a very simple level. First, you said this earlier, Brock, is just awareness and accountability of what you're doing and what it's going to create. That requires spending some time evaluating what you have been doing and if it's going to do the things that you want. From a mathematical perspective, if I make $100,000 a year and I know the national savings rate is 4%, I'm only keeping $4,000 and I'm going to try to get a rate of return that allows the 96 grand to be created for the rest of my life. I mean, if you just put that on paper and you ask my 5-year-old or 8-year-old, they would go, that doesn't work. Okay. So it's one of the things I love about Nelson's message is his 5 key principles in becoming your own banker work for anything. And here's how we'll prove it. I'm thinking about Freddie Freeman in the World Series, who just won the World Series MVP. Okay. The minute he hits the grand slam in whatever game that was, which was kind of the dagger to the heart in the grand scheme of the whole series. Okay. He goes and he finds his dad and he celebrates it with his dad because his dad and he capitalized on something they wanted to be great at. They showed up consistently to work and to get better and to learn, because anything we want to be the best version of ourselves at, we have to put in time. Yet we have been convinced in the world today that we can give away our money somewhere with no true understanding of why, and then expect it to love on us when we're 55, 65. And we have to begin to start asking why. And one of the clearest things that I've ever heard, and I don't remember it might have come from Garrett and your dad, Trent, or your dad, Brock, and many others. We first have to clearly define the difference between investing and saving, and where most retirement vehicles created are tied to investing. I really think that's the simplest thing to start with for most people, because if we understand that words matter, why does that simple statement in question matter so much?
Brandon, this is pretty timely. I don't know if we've mentioned this or not, but on our TikTok channel where little clips of the podcast get posted, recently one of the clips from one of the shows went I would say semi viral. It's up to like probably 500,000 views now, which is really viral for us. So
It's definitely viral for us.
yeah, we're not in the millions or anything like that, but the point of all that is that clip, the reason why it was so popular is because the comments started pouring in. It was very polarizing because all I was doing was I was talking about the average 401k balances. And the point that I was making is based off the averages, that's not enough money for people. And we see that more than anybody else because we work with, people open up their lives to us and we get to see it. So those average 401k balances that are reported, they track pretty close to what we see, on a daily basis with people that we're working with. But either there were a lot of bots or whatever, but there were a lot of people who were like, "Oh, I'm way ahead of this, I'm way ahead of that," all
It was
that
a
stuff.
comparison game.
Yeah, it was a comparison game, which is, hey, I'm great. I'm glad that you're doing better than most. That's great. But I would venture to say those people probably weren't the average. Those people were probably the ones that were pulling the numbers up, obviously they were. But I say all that to say this whole retirement model, this needs-based approach is something that I've talked about before. It actually came up in a conversation yesterday where I was talking to somebody about their retirement plans and everything like that. And he had talked about meeting with a traditional financial advisor, and he asked him, "Hey, what do you think you need for retirement?" And I kind of chuckled and I said, "Mason," I said, "Have you ever retired before?" And he goes, "No." And I said, "Why is he asking you that?" And he was like, I said, "There's too many variables. There's no way to know what we're actually going to need." And on top of all that, what's left out of almost every financial conversation is two things. One, it's peace of mind, the value of peace of mind in your planning out your money and in your strategy. But the other is the difference between average versus actual rate of return. Because I think Garrett Gunderson makes the point that if you get a compounding 12% average rate, if you get a compounding 12% rate of return, after 40 years, you have more money than the Federal Reserve. Like it's like, or more than the Treasurer or whatever. Like it's an insane number. So those high rates of return or whatever, those are not going to be consistent. Those are not going to compound the way everybody's telling you it's going to work.
So I think what is definitely being said there and clear is a lot of what we think is true may be half true, but we have to either experience pain because we go, this is not going to get me where I want to go, or we have to go, could I do what I'm already doing and learn and apply something new and it make it better? So in the stock market question, a lot of times I've quit arguing with people about the stock market. I'll just ask questions like, do you like the stock market? What benefit do you get from it? Is it allowing you to reach what financial freedom is to you? As we talked about in our little men's group this morning before we got on here, when you start writing down what your true measurable goals are, we realize how spending time to get clear on that is the most important first step. And most of the time, when you ask somebody, what is freedom to you? Because if you really boil it down, Brock and Nate, I don't know if y'all would agree with this, but I'm seeing a resounding theme in hundreds and hundreds of conversations. Everybody's looking for some form of peace of mind and certainty and control related to how the money's flowing through their life and what it's going to allow them to do with their time. I can go see my grandkids more often. Well, if you love your grandkids, you're probably going to want to spoil them. You can't spoil them if you don't have money that's loving on you. So you're going to tell them, oh, I really wanted to get that candy for you, but I couldn't because I believe traditional retirement system was the way to go. And now I don't have enough money. Or you're going to go into more debt. I know that sounds harsh, but that is the reality of the rules of the game that we see often. And so we first have to go, what is financial freedom? And I think that's a great place to start, because if we can get clear on that, then we can start working backwards and going, here are the possibilities with the current tools in your tool belt, so to speak. You're not going to build a house with a hammer and a nail and no wood. So we have to get clarity on that. So, guys, how can what we believe in passionately, whole life insurance with mutual companies at a very high level, how can that make whatever anybody is doing more efficient or better in the sense of retirement?
Well, Brandon, that's a great question.
Thank you, Brock.
Let me first preface that it has absolutely nothing to do with the cash value.
Boom.
So, as a podcast that has talked about the importance of utilizing your policy's cash value to acquire other assets that produce income tax more efficiently for you, by implementing whole life insurance into your financial life, it has nothing to do with the cash value. It has everything to do with the death benefit. If you don't purchase permanent life insurance, what you're doing is by default living in a world where you are buying term insurance and then investing everything else that you have. I never say the difference, because the reality is nobody actually knows what the difference is, because you're just hopefully putting the rest in the market. Like, who cares if there's a difference or not? But what's happening is you're buying term insurance, putting the rest of the money in the market, other assets, whatever it may be. And you're going to continue to do that until one day you retire. From that, what that means is on your term insurance, it's either going to be too expensive, or you're going to be talked into and somebody's going to tell you that you don't need it anymore because you technically can self-insure. What that now does to you is you become a slave to three things: the market when it comes to market volatility, the government when it comes to taxes, and the economy when it comes to inflation. And academically speaking, what that would also mean is you can only spend what's called the safe withdrawal rate. That is a whopping 3% after tax. So, because you don't have the term insurance, now your money in the market has to act as your legacy and your income. So you're only allowed to take the safe withdrawal method, which right now is 3%. So on $1 million, that's 30,000 taxed at whatever tax bracket that is. You'll have a little bit less. When you purchase and implement whole life insurance, we're not saying 100% of your income needs to go through the whole life insurance policy. What we're saying is you need to put money towards the whole life insurance policy to acquire death benefit that's going to be permanent in your life and guaranteed to pay out, because we all live until we die. And if we know that we are matching a guaranteed event with a guaranteed contract, all those other assets that we're buying all along the way, whether it be from the other money that's accumulating in our income reservoir or the cash value that we used along the way, now we're going to show up at retirement with two things: permanent death benefit and money in the bank. Because now our money does not have to be our legacy and our income, all it has to be is our income, which means we can spend all of that down with a peace of mind that we won't run out of money, and we can take more than the person who's taking safe withdrawal. Why? Because we have this really cool thing that's called a death benefit, and it will replace all those assets that we spent throughout retirement, allowing us to have what we want, not just what we need. And so that whole life insurance death benefit acts as our turbocharger for all the other assets that we could ever think about putting back into our financial life.
It's
Hopefully
good stuff.
that wasn't too much there, Brandon.
No, that wasn't. It reminds me of something that really jumped out to me when we first started learning about the LEAP model, lifetime economic acceleration process, and how do you want a money flow that gradually goes down on a reverse J curve over your lifetime, or do you want it to go up to continue to reach and protect your maximum potential, even if it changes when you're 40, 50, 60, 70, 80? And I don't know about you guys, but I have gotten real clear on at least this, and I'm a slow learner. World teaches us to be consumers, and the ones who think like creators create impact that creates continuing to increase your maximum potential in the world. The world teaches us to be scarcity minded, which is directly tied to consumerism only. And so I asked the 17-year-old, coolest conversation I've had in the last month. 17-year-old gets on my schedule, former member's daughter, not former, current, current member's daughter. Whoops, current member's daughter. And she just has been reading Become Your Own Banker. And she's like, I see my friends doing these things, and this has really got me thinking, and I'm curious about this. Her words, 17. She said, I've got multiple friends who bought a car brand new off the lot, and almost all of them but one, the vehicle's been repoed already. She's like, I don't want to live that way. But why did they do that and think that was normal? And I think it's a great question, because if we explore why, we realize that the world says don't think long range. The world says go buy that car, you deserve it, as long as you can barely make the monthly payments and you have no ability to create value anywhere else because you're trading time for money. And you just traded time for money that traded for a depreciating asset. How could we ever create momentum? And that is where the poor mindset is perpetuated. If I buy, I'm going to constantly be in the rat race of trade time for money, and I'm never going to be able to outrun it. Which is why, Brock and Nate, we did this last week, and it may or may not be a podcast, it may become separate clips, but Brock walked through a beautiful, with numbers, example of how mindful cash flow awareness and having ways to keep more of your money creates more impact beneficially than a certain rate of return that you don't control. And it is pretty staggering. We might just have to make that its own separate podcast just for people to just digest it and see it on YouTube. Probably you need to see it. So what is something that you guys love the most when somebody realizes that whole life is just a tool or turbo booster, as you said, Brock, that's go turbocharger, excuse me, turbocharger that's going to make what they're already doing better. I think that's a big piece. It's not either or, it's and, as our buddy Caleb Gillum says. It's not either or, it's and. Nate, what is something that you really enjoy when you see that aha moment?
I've had a lot of fun just watching people's creativity unlock. When people have access to capital, either opportunities are going to find them or their creativity is going to build an opportunity that they didn't see before, or didn't have the ability to create before. So I think that's probably one of my favorite things is when somebody gets it and then you start to see them sort of peel back different layers, they start discovering things about themselves that they didn't realize. So I think that's a lot of fun.
Brock, what about for you? I know you have, on average, your clientele is quite a bit younger than ours, as far as average goes. What's really fun that you see when you've got a 25 or 35-year-old you're talking to and they have an aha moment as far as like, whole life isn't what I thought it was, and now I understand more and how I'm going to join it with what I'm already doing.
Yeah, they're a lot of fun because we get to talk about the fact of having access and control of your dollars and being on track to retire before the age of 65. However, majority of my clients are under the age of 45. However, lately through some referrals, I've been introduced to some people that might be a little bit older than that.
A little more seasoned,
a little bit
not
more
older.
seasoned,
Thank
sorry,
you.
that come in and they already have assets. They already have things going on. And one of the things, it was fun. Recently, one of these couples came in and it was funny. We were walking through some items and they were at first against the life insurance. They were like, we don't know about this. Probably don't want to spend the money on it. Just continue to put it in our 401k and market and stuff. When they first got to us, they did not know how much money they were saving. They're maxing out or putting in about 19 grand into the 401k that had no match to it. And so all of their assets were either their savings account, their 401ks, a 529 plan for their children, and their home, which majority of the time is what that looks like. And we ran the numbers out and got to a certain place and we really liked it. Now we wanted to ask the question, well, how can we improve this? So the first question we walked through was, in the event that you were to get disabled over the next 10 years, do you guys have in writing anywhere that guarantees somebody's going to continue to make these deposits into the account? They said no, and I agreed. Said, would that be important to you guys? And they said, well, yeah, if we could get it, absolutely. So, all right, well, let's write that down and see if we can get it. And then I said, okay, well, if we could access this money along the way, if other opportunities come along, like buying real estate or a brokerage account or whatever it may be, would that be more beneficial to you? Yeah, absolutely. All right, okay. Then we walk through the talking points of, do you think taxes are going up, down, or staying the same over the next few years while you guys are working? And they moved from California, so their answer was they always go up, which is fine. And so as we walk through this, one of the things that we ended up doing was sending some of that money of their free cash flow towards permanent life insurance premiums. And what we found was we actually showed up at retirement with, as of right now, things continue the way that they are, with almost, I want to say it was $300,000 more in assets.
It reminds me of one of my favorite stories over the past week also, Brock. So we realize in the world that we're in that if anybody is intrigued about what we do, we actually make it to where they have to prove to themselves that it's important to unlearn what they've learned if they're trying to learn this new thought process and this life process. Or if they already have assets, we help them walk through, like you just said, Brock, going, hey, could we take all the energy and effort you're already applying to life and could we make it more efficient and allow you to have a better outcome without really changing anything other than adding this tool to your tool bag? And when you eliminate some of the things that hold people up, most of the time I'm finding that it's the word whole life insurance. And so when you ask the question, would it be worth exploring if we could take what you're doing already and make it better with less risk? Nobody says no to that.
And Brandon, one of the things, so one thing I do have to correct is I said $300,000 to $400,000 in assets at retirement. That was assets at legacy. At retirement, it was about $50,000
Okay.
more.
Yeah.
But
So
what we did was we actually changed the numbers a little bit to show that in the scenario that they're on right now, they would have more assets when they got to retirement. But once they saw the two, I said, hey, do you think it might actually be a good idea to go this route, even if we showed up with a little bit less in money? To which they said, yeah, actually, if it's a little bit less, but we have all these other benefits, yeah, we'd like to do that. And one of the things that you also walked through was the fact of knowing that now someone has come in, they're aware of what's going on, and now they're supported by a team that will help them make decisions on an ongoing basis. So they're probably going to come out higher than what's projected.
a resounding theme of what Nate and I have had the humbling privilege to experience lately is how rare it is for us to realize the value of accountability and the impact it can bring. And a lot of times, I don't know if you guys are like me, but sometimes when I hear the word accountability, I kind of flash back to what I used to think it meant, which was not necessarily a good thought process. It was more like somebody standing over me and saying, you're screwing up. And now it's way more of, hey, do you know why this is important to you? Have you decided for sure this is valuable in your marriage, in your life, in your business, in your kids' lives? Yes, absolutely. Would you be okay if we met quarterly to be sure that you feel good about where you're headed and the targets you're hitting? And maybe we have some resources and some relationships that could help you do it more efficiently. Yeah, what's the downside of that? There isn't really any, except for shifting our thinking that we're going to get farther together if we have people on our team that really all want to grow together. And the resounding theme that I see for most of our 45 to 65 members is they are yearning for consistent accountability because they've never had it. But it's also the biggest hurdle to get over, even if what they've been doing hasn't got them where they want to go. There's a lot of pride and understandable things that we all deal with when opening up to the fact that I've been doing this on my own for so long and now I realize I'm not where I want to go. And so that requires a lot of humility from us to go, hey, look, we've been there too. And I still feel like I'm there sometimes because if you ask a room of 100 people, do you think you've reached your full potential? Nobody's going to raise their hand unless there's somebody I don't want to hang out with. So there's always this desire, an insatiable desire to get better. Okay. So when I hear the word average rate of return, this is going to sound awful, but this is what I think, guys. Who wants to be average? If I hear maximum potential, I like that, especially as a former athlete. If you could squeeze all the maximum potential out of all the years that we played sports, it would have been a way better version than an average. Okay. And that's how we think more than anything. What was it that Yogi said about thinking, Yogi Berra? He said, about the mental side of the game. I can't remember the exact quote, but he basically 10% is physical, 100% is mental or something like that. Same thing with money. So guys, any parting thoughts on a real financial plan that allows you to have peace of mind during retirement and getting clear on that?
Well, I will say this, something that I believe is unique about our process, and you guys have both touched on it in various ways. We don't deal in sales hype. We deal in the facts of what's going on with your specific situation. Because the typical financial conversation is going to be, hey, I can get you this high rate of return with the lowest fees. Those aren't the conversations that we have. We're more focused on creating the most efficiency so that we can reach your maximum financial potential. And that is what really sets us apart in this financial space that we operate in. People show up and they come away going, that wasn't what I thought it was going to be.
I'm stealing this from Dan Kramer, but I know it came from Garrett, and I know it came from Trent, and I know it came from a lot of different conversations, but I really liked it. If we first start with, what does freedom look like to you? Have you really set in that? At whatever stage of life you're in, 30, 40, 50. What is an ideal freedom, with the understanding that I want as much flexibility to change if it changes as I age. And we let it reverse engineer backwards through the categories of faith, family, fitness, and finance, and what we want to be able to say about those things. Then we start with, what does proper alignment look like today? And how do I just make my dollars, or my blood flow, if you will, through my life, allow my heart to pump more efficiently to create the freedom that matters most to me? I've yet to talk to anybody in our world that is interested and goes through our process where their definition of freedom yet has anything to do with how much money they have in the bank, and has everything to do with how that money is creating the value of time with the people, the places, the experiences that they want to experience. Yet, I've not had one person say, I want $100 million in the bank. I've heard them say, I want to spend quality time traveling. I want to take my kids to experience this. I want to start a nonprofit. I want to spend more time with my grandkids. I want to go see all the ballparks, in the US, because I'm a baseball fan. It's always about time, which allows us to realize that money's just a tool.
Dude,
So
you got my juices flowing right now.
get me
Because,
fired up.
I mean, people are killing themselves for more because that's what they're told that they need. They need more zeros, in the bank. They need a bigger house. They need another car, all that stuff. But the truth is they don't see until they're on the other side of that mountain that riches, money alone doesn't equal freedom. And true freedom is about autonomy. It's about being able to live your life according to your values.
I think a way to wrap this up, and I think we've all kind of said it in one way or the other, is spend some time getting clarity on what you feel like you want life to look like when you retire, when you get to financial freedom. What is life going to look like after that? Because, yeah, you could sip pina coladas on the beach, but I've met some people that have been able to do that, and it only lasts for about 3 months. And then you're like, all right, I'm ready to get back to doing something. So spend some time getting clarity around, what would your life look like? What would you spend time doing? Who would you spend it with? Where would you be going? Take some time to walk through that so that you've got a game plan and an idea of what it's going to be like once you retire, hit financial freedom, and what it might take to get there.
We appreciate everybody listening today. We hope that we brought value to you, that at least made you think about how you think. We encourage you to just take that practical advice Brock just said and just kind of sit in it and document it and think about it. And what does that look like? If you benefit from anything we say, we love likes and subscriptions and all those other buttons that are on the social media world. We don't even know what viral means, as you could tell earlier in the podcast. We think we went viral. We're not sure. But we want to bring value, and we know that the algorithm likes when comments and shares occur. Next week, is your money tied to your terms, or is it tied to someone else's terms? We're going to have some fun talking about that and see if we like the partners that we have our money with and the rules that go along with it. And we'll catch you on the next one.